It's happening, you guys. The Federal Reserve is finally starting to cut interest rates. They've been going up for the past couple of years, since April of 2022, roughly, and they're finally going to start bringing interest rates down. What does this mean for you guys? That's what I'm going to go over in this video. I'm going to keep this video relatively short. I'm going to try to keep it under 5 minutes. How is this going to impact the real estate market? Here's what's going to happen. Mortgage rates haven't changed much since Wednesday when they cut the interest rates 0.5%, because they were already kind of priced in previously. We saw this coming, so interest rates were already adjusted for previously before the meeting occurred on Wednesday. Mortgage rates are mostly affected by the 10-year Treasury bond yields. I don't want to get into too much detail on that, but that has a greater impact on mortgage rates than the Federal Reserve rate. However, as the Federal Reserve cuts rates, it definitely has an effect on the 10-year Treasury bond. So as rates get lower, generally bond yields are going to get a little bit lower as well. That's usually how it goes. So what's going to happen? Most likely, depending on what the economy does, the next meeting, they're probably going to have another small cut. The next meeting, they might have another small cut. We might be down, a percentage point over the next 3 or 4 months, potentially, on the Federal Reserve rate. So here's what's going to happen. I've been talking about this for the last 3 or 4 months. I've seen this coming. This winter, it's going to be relatively slow as far as real estate's concerned, because as of right now, interest rates haven't changed too much even in the last month, even with the rate cut that occurred last week, okay? Between now and the end of December, it's the slow season. The market's going to be a little bit slower. After the first of the year, the market is going to blow up, and here's why. Number one, interest rates will probably be lower at that time because the winter is going to be slow. The new president's going to be in office. That has an impact on people's psychology, so that's going to cause the market to slow down a little bit. And I think as a result of that, the Federal Reserve is going to cut rates even more, and bond yields could drop a little bit more as well. So it's very possible that after the first of the year or around that time, that we might be looking at mortgage rates somewhere between 5 and 5.5%. I think that's highly likely. As they get down closer to 5%, which they will eventually, whether it's the first of the year or sometime going into the spring, all of these people that own houses that have these 3% interest rates or 3.5% or 2.75% that have been wanting to upsize or downsize but didn't want to give up that 3% rate are going to start moving, because 5% isn't horrible. I mean, we were at 7, right? 5%, we're getting a little closer to being reasonable, and a lot of those people are going to start pulling the trigger. That will create a little bit more inventory, but all these buyers out there that have been waiting for this are going to come out of the woodwork. Watch. The market's still been decent over the last year or two, even with rates being where they are. There are a lot of buyers out there that have been waiting for this to happen, and now it's starting to happen, and they're going to come out of the woodwork. Mark my words. On a $500,000 loan, if you have an interest rate that goes from 6.5% to 5%, that first year, you're spending about $7,500 less on your mortgage, right? Which is $600 a month, roughly, somewhere $625, somewhere in that range. That is a significant difference on monthly payment. So all these buyers are going to start coming out of the woodwork, and most of that is going to happen after the first of the year. So I'm going to say what I've been saying in my market updates. If you're thinking about buying a house, do it in December sometime. You're going to get that lower rate. There may still be some drops after that, but you could always refinance your loan a year from now and get whatever rate we have at that time. I mean, it could be 4.5%, it could be 4.75. I don't know what it's going to be next fall, but in December, it's probably going to be lower than it is now. And I guarantee you, home prices will be a little bit lower than they are right now because it's the slow season. Buy your house before the end of December. Now is fine as well, but I think in December, you're going to get a little bit of a lower rate. But I think from the end of December 31st forward, I don't think you're going to get a house for a lower price than you will between now and the end of the year, because I think we're going to have slow and steady appreciation, 4 to 6% a year for a while. And when I say for a while, it could be 5 years, it could be 10 years. I don't know how long it's going to last, but it's going to be a while, at least a year or two, right? So that $500,000 house that's $500,000 this December, next December, it's going to be probably $525,000. In the spring, it might be $525,000. Spring, the values always shoot up, okay? So you might pay $515,000 for that house if you wait until March when you could have gotten it for $500,000 in December. And although you might have a slightly higher interest rate in December than you would in March, potentially, you're getting a better price on the house, and that more than makes up for that. If you're thinking about selling your house, whether you're going to do it now or in the spring is going to be up to you. In terms of price, it's not going to matter much. You're going to sell it for a little less now. You're going to pay a little less for a new house. If you wait until spring, you're going to pay a little bit more. You're going to sell yours for a little bit more. So with regard to that, it's a wash. However, if you are looking to upsize or downsize or sell your house and move out of state, if you wait until spring, you're going to get a better mortgage rate on your new loan at that time. If you're going to do the deal in cash, it's not going to matter whether you do it now or in the spring. But if you're going to get a loan, wait until March or somewhere in that range. You're going to get a better rate on your mortgage, which is going to be better for you in the long term. So again, what's the impact? The market's going to be hot next year because of these interest rates cuts. All of you guys that are saying the market's going to crash, you're wrong, and you're going to see what happens. Anyway, hope this is useful for you guys. If there's anything I can do for you, call me anytime. Leave me a comment. Subscribe to my YouTube channel if you want to see more of these updates. I'm always here to help. My number is 720-235-7388. Hope you guys have a good rest of your weekend. Talk to you soon.